Hi, I'm Chase with Pack Tax, and today we're going to talk about self-employment and taxes, everything you need to know. Self-employment is one of those things that when it comes to taxes, there's a lot more that goes into it than just your basic W-2. So it's good to know the ins and outs. So what is self-employment? Self-employment defined by the IRS is any income that comes from personal services that cannot be categorized as wages. Basically, what it means is if we have an employer and we're considered an employee, those are wages. Anything else will be considered self-employment. The three most common types of self-employment is you own your own business, so you're a business owner. Another one that a lot of people may not think of is an independent contractor. So we may work with an established business, but we are not an employee of that business. We are just contracting to them. That is considered self-employment. The third, and this one is the most commonly missed, would be just side hustles. We're all looking for extra ways to make a little bit of money, and there's a common misconception that if we make only a couple $100 doing something on the side, or we don't make a ton of money doing something on the side, that we don't need to report it. So any money that we make on the side, whether it's a hobby of ours that we make a little bit of money for, or if it's a full-blown business you need to report and take care of, and that is considered self-employment income. The good news, if you find a tax professional, they can help you navigate all the ins and outs of that. One of the biggest questions is, with self-employment, what taxes do I owe? So if you have W-2 income, it's straightforward. They take the taxes out of your paycheck. You don't really have to worry about it when you file taxes. With self-employment, this is not the case. You're going to have two types of taxes that you have to consider. So the first is income tax. This is tax that everybody pays. It's based on your total income for the year. That will put you in a tax bracket for the year. And it's based on your total taxable income after deductions. The amount of income tax you pay varies based off what your income is. The most common percent people pay is anywhere from 0 to 22%. That's the most common range that just kind of increases as you pay. But it does go all the way up to 47%. So definitely something to keep in mind, be mindful of. The other type of taxes that we pay when we're self-employed is self-employment tax. When we are an employee, we pay half and the employer pays half, but self-employment, we have to take care of that full 15%. So with self-employment income, we have to think about both income tax and self-employment tax. The big difference there, we only pay self-employment tax on the portion of our income that is from self-employment sources. Income tax, however, we pay on all of our income. So we may have a W-2 job that we work, and then we have a business on the side. We'll pay income tax on both of those, but we'll only pay self-employment tax on the portion that came from our business. With that, people are wondering, why would I run a business if I'm going to pay more taxes? There are some benefits to being self-employed that we don't get just being a traditional employee. Running a business can be expensive, as I'm sure many of you know, and any expense that we incur for the business is a deduction. If we are an employee, we may have to buy a uniform, buy clothes, buy food on the job. If you're an employee, you don't get to deduct any of that. But if you're self-employed, you have your own business, any expense we incur for the business is a deduction. When we're figuring out our self-employment income, what it is, it's our gross income, our total, minus our expenses. That amount, the difference of those two, will be what we actually report on the tax return. So when we're tracking expenses, what do we track? The short answer is everything. The more that you track and have record for, we can include as expenses on there as long as it's related to the business. The important thing is to keep receipts, keep invoices that we pay, just so you have some documentation if the IRS ever had any questions about our expenses. And I would highly recommend tracking it in a spreadsheet, or if you use an accounting software like QuickBooks, just so we have detailed records of those expenses. Three of the most common deductions, and I would say most commonly misunderstood deductions, are mileage that we have. So if we're driving a vehicle, a deduction for having a home office, and a deduction for meals. Those are the three most common, three most misunderstood. So if we have a vehicle we use for the business, you can either keep track of your total expenses for the vehicle, your gas, your maintenance, maybe you bought new tires, or you can track how many miles you travel in the vehicle. And you can take either your actual expenses or the IRS gives you a standard rate per mile you drive. This last year it was 67 cents a mile. That accounts for any potential expenses we would have for the vehicle. It's wise to track both. So when it comes to tax time, we can see what would be the bigger savings for you. Mileage is definitely simpler, but if we can maximize tax savings, that's always great. The other is a home office. This doesn't just mean we work from home sometimes. This is a dedicated space we have in the home that we use primarily, almost exclusively for the business. The home office, kind of similar to mileage, there's a standard rate, it's $5 a square foot. Or we can keep track of our expenses, so we can keep track of utilities for our home, we can keep track of the interest we pay on the home, and then we can take a portion of that based off the square footage of the office relative to the home. The last one is mills. Mills are only deductible if we are traveling, so we're away from home on a business trip or have to travel overnight for work. We can deduct our mills then. We also can deduct it if it is a business meeting or if we're meeting with clients. So if it is a work-related mill, so we are meeting with clients, meeting with potential clients, discussing business, we can keep track of those mill expenses as well. And in 2022, they changed it so we can only take 50% of our mill expense rather than 100%, but it is still a deduction to keep track of. A list of other common deductions. These are just typical expenses you have running a business, or if you have some self-employment income, if we have any supplies, equipment that we need for the business, if we have to travel, hotel, airfare costs, meals while traveling, health insurance, self-employment taxes. If the job requires any education, training, you may have some licensing you need to pay for to maintain, advertising, and professional services. How do we prepare for taxes? So I own a business, tax time is coming up. What do I need to do to get ready for my tax appointment? The most important thing, keeping good records. Worst case scenario, if you aren't very organized but you have your records, your tax professional can help you organize that and get the information from those reports to put on your taxes. Ideally, you'll fill out what's called a profit and loss, which is just a simple spreadsheet or document you have that will have a sum of your total revenue for the year, and then it'll have a breakdown categorization of expenses, so advertising costs, travel costs, supplies, etc. And during your appointment, make sure to ask lots of questions. Our goal, especially here at Pack Tax, is to help you understand what's going on with your taxes, with your business, with your return. We want to make sure that you're educated so that you have a smooth tax time every year. Here's a quick example. So this is Mr. and Mrs. Self-Employed. They run a business. With taxes, any self-employment income, whether it's from a full-fledged business or if it's just from a side hustle, gets reported on what's called the Schedule C, which is this tax form here. It's not a separate tax filing or tax return. You don't have to do one just for the business. It still goes on your personal taxes, and it all goes on this form here. So this last year, Mr. and Mrs. Self-Employed, they made $50,000 from their business. And so we can see our gross income here, $50,000. Then the second part of it is their expenses. So they kept track of their expenses. They had their office expense. They had a home office they used. So it was 100 square feet, so they get to deduct $500 from that. They paid $5,000 for advertising. They had $500 worth of expenses from their vehicle. Supplies, they had a business license they needed to get, so $250 from that. $1,000 for insurance. As you can see, they just had various expenses here. So their total expenses for the year was $13,250. What is reported as income for them is the difference of the $50,000 and the $13,250. So they don't have to report the $50,000 as income. It is this $36,750. And I'll show you how that works kind of in the full tax view. So this is the 1040. This is the tax return. Everybody has to do one of these. Their additional income is this $36,750. This is their business income for the year. This here is an adjustment. This is half of their self-employment tax. This is a deduction there. They also get this QBI. It's a qualified business income, which is a deduction just for having qualified business income. So if you're self-employed, You get a few deductions that the IRS gives you there, and then the standard deduction for the year. So the two types of taxes we talked about, we had income tax. That's based off this line here, their taxable income. So after all of their deductions, um, their taxable income for the year is just shy of $4,000. So they're only paying 10% tax on that, and they're going to owe $398 from their income tax for the year. Down here though, the $5,192, this is their self-employment tax. This is based off the $36,750. So the self-employment tax is on our total self-employment income after expenses, but not after the deductions there. So with self-employment, usually the big kicker is the self-employment tax, the 15%. So their total tax for the year would be $5,590. This is the 15%, and then the $398 is just the 10% of their taxable income. So that's how it all kind of works, how the different pieces come together on the tax return, both our income, our expenses, how much income tax am I going to pay, how much self-employment tax I'm going to pay. With self-employment, the IRS requires us to do what's called quarterly estimated payments. So rather than paying this $58.41, you can see that there's a penalty attached to here for not paying our tax beforehand. The IRS wants us to pay quarterly beforehand so we can avoid those penalties. So what we would do is we'd just take our total tax is $55.90, and we'd pay a fourth of that every quarter before tax time. That way, when tax time comes, we're not stuck with a big tax bill. We're not stuck with any penalties. So this is self-employment in a nutshell. Like I said, at Pack Tax, we really like to help people understand what's going on. We like to educate. We want to make sure people don't leave our offices confused. So if there are any additional questions about self-employment taxes or just your tax return in general, give us a call. We would love to answer any questions you had.